Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. This is our Forex Technical Analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. Before we pull up our video, we always want to start off our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. You can lose all of your money. Any strategy we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. As we said, this is our Forex Technical Analysis trading plan for the pound dollar, the euro dollar, and the dollar franc. In each video, we look at the prior session's price action to come up with key support and resistance price levels. We'll review the gold chart to come up with leading sentiment. We'll try to create a low volatility and sidebar watch list, and we have an education spotlight at the end. Please send your feedback and comments to contact@dmbfx.com, and let's head to the charts. Here we are looking at our market sentiment indicators to see how strong the market is moving. We know that it has an inverse relationship with the dollar. So here we are looking at the dollar. We can see the big move that's made up here. We'll zoom in. And we were watching 81.196. We did get a little break above that, but now it looks like the market wants to cycle a little bit more, consolidate a little bit. You can see that it wants to hold up here at 79.80ish. So as long as it hold up 80ish, we can definitely say sideways to up. If it breaks 80, if it breaks this 50-moving average, we still have 79 to watch, but we want to see it hold up here at 79.80ish. So sideways up on the dollar. So a strong dollar, moving a little bit sideways. We'll go over to gold. And we'll see that the gold is starting to make a little comeback here. You know, as a strong dollar, gold starts being a little weak. But in this last month here, the month of January has been good for gold, and it's made a nice move up. But now, again, it's back in this range between 1600 and 1670-ish. Can it break that to make another run up to 1760? Not sure. What's going to be the catalyst? Well, we can get that maybe out of the FOMC policy statement coming up this week. If we're going to print some money, that's going to be good for gold. If we're not going to print money, that's going to be bad for gold. We'll finish off with crude oil. Man, gas back up to 345. But you can see overall, we're back cycling between 102 and 96 sideways. Okay, let's look at the daily chart of the euro dollar. And one thing that's interesting, and we've been talking about this for a while, let me zoom out here to monthly. And we've said for the past couple weeks that when you look at the market, and here we are back in 2007, 2008, and we said this was a price value, 1.26. If the market does not stop here, then we're going to head back down here to this 200 moving average. So we needed to find support. And you can see that right now, going back to the daily, that's exactly what the market did. We had a nice week here, and now we've run up. Another thing that's key here that happened this week is you can see the 20 moving average consistently acting as resistance this whole way down, and now we've broken through, and we're coming up here to the 50 moving average. So it'll be interesting to see what happens here. Now you can obviously put in, if I wanted to, I could put in a line in here at 1.292. But I'm going to hold off yet. I want to see what happens here with this price action, see what happens here with the 50 moving average. And of course, we know we're still trying to get back up here to 1.31. So, you know, the buyers have come in. They said they found value. We'll see how far they can push it. Now, when we come over here to our 1 hour time frame, we can see we are in a sell zone just above our long-term moving average. The euro had been in control, and you can see basically once that euro really took control here, that's where we saw our price action really starting off here, and then we took off up here, and then the dollar took control. We went sideways, and once the euro once again took control, we saw the move up again. But the euro kind of fell off here against the dollar. We are up well off of the long-term moving average here for the euro. The dollar also making a nice little move up here. So with the strength of both, that's why we're seeing the price action here move sideways. So again, it'll be interesting to see. This is where the sellers in the past have pushed us down. So we'll see if we actually make it up here to the 50 moving average, if the sellers will push us back down once again. Now for the pound dollar, you see we drew on our line here, and it's once again the buyers, just like the euro dollar, have found value and it pushed it up. But look, the euro dollar, the pound dollar here, I'm sorry, has pushed itself all the way past the 50 moving average, and now we'll be watching this downtrend line that we've had in from before. We'll zoom out here. You can kind of see this downtrend line, it comes off the monthly, so it's a longer term, which makes it a little bit stronger. But it also made its way back into this range. You know, where this downtrend line is where sellers in the past have once again claimed value. So it'll be interesting to see what happens here. We are clearly in a sell zone just above our long-term moving average. The pound is in control. Got a little divergence, which got our spike up here. Again, way off our long-term moving average with the dollar, so we may see some pullback off of that. So we see the euro and the pound moving nicely against the dollar, and we can see the franc pulling, the dollar franc pulling back as the franc showed a little strength there. But we're watching this support here, 0.92, and right now you can see it is holding up. Another reason why you see us drawing these lines. We are in a buy zone below our long-term moving average, with the franc being in control. As long as the franc is in control, this will continue to move lower. And a very nice move here. So we see all three, the pound, the euro, and the franc, all off their long-term moving averages. As we look at today's watch list, we're first starting off with our low volatility watch list, which is our 1 hour time frame using Bollinger Bands. We're looking for consolidation, looking for that squeeze and then the breakout. And here we have the euro yen, the dollar Canadian, and the dollar franc that we're going to want. Not perfect setups, but they do show the consolidation that we're looking for. For the inside bar watch list, where we're looking for the range of today, comparing it with the previous day, so Friday comparing it to Thursday, and we do have one candidate, and that is the dollar yen. Again, looking for a breakout in the direction of the trend. As we come to our education spotlight, we want to talk about the characteristics of successful traders. Successful traders specialize. In our instance, we specialize in Forex. You can't be a jack of all trades. You need to specialize and find one investment vehicle that you are good at. Successful traders take losses in stride. They know that there's not a losing trade. There's a cost of doing business. We're not always going to be right. Sometimes the market has other things in mind, and it's just the cost of doing business. It's not a statement against you. It's just the cost of doing business. And in order to take those losses in stride, you have to be able to stay flexible. Again, making adjustments as the market changes. You have to change with the market. And again, these three are all tying into each other. Losses in stride, staying flexible, and looking before you leap. You don't trade just to trade. You trade because you set up a criteria, and that criteria has been met. We've talked about this often, about passively following expert. There's nothing wrong with following experts. You know, we consider ourselves expert and give out advice. What is important is that you have the financial background, the literacy, the education about the stock market, that you're able to discern that the advice that the experts are giving you matches who you are and your investing strategies. And finally, successful traders avoid that blowout trade. And a lot of that has to do with the psychology of trading. Again, take your loss in stride and live to trade another day. Make sure you comment and subscribe. Let us know what you like and don't like so that we continue to add value. You know about our resources. We've got a nice free 5-video course on how to develop high probability trading setups. We hope that gave you an insight to who we are as coaches and how we can help you develop that trader's mindset so that you can take your losses in stride, so that you can handle your the emotional side of trading. If you're looking for someone to be that expert for you, we do have managed Forex accounts, leading Forex brokers, full transparency. They're your accounts, not our accounts, so that you can have 24 access, and we'll develop individualized trading plans for you. Make sure you check out that link. And of course, if you're looking for signals, we have that too. Find that signal that matches who you are as a trader. As we just said, it's nothing wrong with getting signals, but make sure they match your account size, your risk tolerance, and your mindset as a trader. Because at the end, it doesn't make a difference if you have all of that if you're unable to pull the trigger. And we can help you develop that trader's mindset to be a successful Forex trader. Thanks, guys, and I'll see you next time.